Welcome everyone to the Q1 2025 webinar. Thanks so much for taking time out of your busy day to join us. Hopefully, what I have to say today is helpful as we move into the new year. I'm going to touch base on the trends we are positioning for. We are a thematic portfolio. We find that the VC approach, the venture capitalist approach to tech, is often a winning combination on the public markets, where you're looking for explosive trends, you're looking for outsized demand, you're looking for areas in tech that have not plateaued, that have a big growth trajectory in front of them. And that's why we talk a lot about trends on our site. We clearly, if you've ever joined us for an earnings season, you've seen multiple reports on even a single company. We do a pre-earnings and a post-earnings on the financials. We don't leave that piece out, of course, but trends are what make or break tech. Thematic investing and those pieces you cannot ignore if you plan to make money in the sector. That is why I take extra time with you every quarter to go over what trends we think are in play, what trends are paused, which trends are pushed out further. And then Knox, of course, will chime in on the broad market and his portfolio strategy. I will discuss portfolio positions. If you're an advanced member, the momentum stocks are left off because we invite pro members to this webinar. You've probably heard the words Big Tech Capex over and over and over again. And what is so important about Big Tech Capex is the spending is unlike anything the public markets have seen before. A couple of things is that every time the market, or I should say the analysts, try to nail down what CapEx will look like, there are more and more upward revisions. And what we know about next year is that it will remain strong. And that is everything an AI investor needs to know. You could probably jump off the webinar now. I mean, there's a lot more to go over, but we need big tech CapEx to remain strong. Never seen public companies deploy cash at these levels before. And management teams have been very clear that the risk of underinvesting far outweighs the risk of overinvesting. What those management teams are explaining is that even if the street disagrees, they're moving forward with higher CapEx. In fact, I went back and looked at our estimates around this time last year, and it was 155 billion. We will close this year at 224 billion. Let's say into the high teens, low 20s of 200. That is about a 44% difference on already very high numbers. Of these, Microsoft has already given us their 80 billion number. That's 20 billion a quarter. That is up from original estimates of 12 billion a quarter. This, again, continues to fuel the AI economy. We are positioning to capture this. When we talk about AI software, it's very speculative. You certainly are not seeing, hundreds of billions being spent on AI software. I'm talking about your best of breed type companies. Most of them won't even report their AI revenue, which signals to me it's less than $1 billion. And that is why we are so concentrated. We are extremely concentrated in the hardware stack, is because of these numbers. And as long as big tech keeps saying we're going to buy, the IO fund will continue to say the upside is in hardware. And when we look at 2025, the estimates right now are 280 billion. That would be a 25% year-over-year increase. I fully expect those to be higher when we have this conversation in a year from now.